Thanks a lot for the invitation. It's always a pleasure to, and we're always finding a good excuse to be in New York, preferably if the weather is slightly better than today. We're happy not just to be here for this Latin America Capital Market Summit, but it's also slightly more than 1 year that the new administration started. So we thought it was also a good opportunity to think about what we have done, what we have achieved over the last few years. Talk a little bit about the context in which the administration started, and where are we, and what we could expect for a year like 2020. And when we think back of in retrospect to what was year 2019, there are three characteristics that we wanted to highlight in terms of the conditions, the fiscal and financial conditions in which the administration started. The first one is we were coming up of a cycle of increasing debt in Mexico. The debt to GDP ratio reached a peak in 2016, and we were very conscious that we needed to be extremely responsible in terms of not only how the economic will be managed by the new administration, but particularly clear about the signals that will be extracted from policy decisions from the fiscal position of the administration. So the main anchor and really the main variable that we focused was in running a primary surplus for the first year in order to stabilize the debt over GDP over GDP ratio. This, I mean, we were able to achieve it. I mean, we closed fiscal year in last December, and what we're really proud about it was the first time in almost 11 years in which this was done. So between 2007 and 2016, you have a continuous increase of the debt over GDP ratio. Then you have a slight reduction in 2017, but that was mainly done to the operational remnants of the central bank. So the very first real effort was done in 2019. So that was the first thing that we have very, very clear in terms of what we will be, what we needed to face. The second one was that the economy unfolds in 2019 in very specific economic conditions, both locally and globally. In terms of the local scenario, we were facing two things. One, it was we were coming out of over a very low but very long expansionary period. The expansionary period in Mexico started roughly around 2010, so we were getting to an 8-year period, which was the longest, at least over the last 50 years. So it was expected to have some sort of a slowdown. I would say more of a cyclical slowdown. Then there's some sort of, I would call, a structural cycle that is coming out of the first year of government and in each new administration. But it is slightly, we have a slightly different view, or our reading is slightly different of what this may happen. Usually what you find in the press is that it is assumed that new governments take some time to start up. But there are actually some structural issues related to expenditure. The last year of each administration, this is an election time, and there's an increase, a huge increase in expenditures. Secondly, when you look to investment, to the investment side, usually an administration which is ending is trying to close their projects to finish the public infrastructure that they have started, and they are slightly reluctant, and it's probably understandable to start new projects because it will be perceived as starting something that they want somebody else to finish. So a lot of the public infrastructure works that we started from zero, and it takes some time to get it off the ground. Both work that has been done recently at the Central Bank in Mexico and at the IMF show that no matter where was your baseline level, there's around a close to 2-point reduction in GDP when you got into a new administration, at least for the last 40 years. And the third issue was we were very conscious that it will be a new administration, new team, new faces, and new faces also for the markets, and that we wanted to be very, very careful in terms of what will the signals will be sending and how this will be received by the markets. As you probably are aware, close to 27% of all the debt of Mexico is in a foreign currency, mostly dollars, then euros, and then yens. But also a big part of our debt in pesos is held by foreign investors. So non-Mexican investors is a very, very important base for us, and we wanted to send the right signals. Now, that ended up being more easier said than done, because as you may remember, one of the very first decisions during the transition team was to change the direction in the way in which the airport system will be arranged in Mexico City, canceling the project for the new airport in Mexico City, and bet on a system of three airports, and that required a huge liability operation. We actually have two very important, very, very large liability operations through the year. One was the operation that we closed in January related to the bonds of the new airport, and the second one, very large one, was the one we closed last September related to the liability management of Pemex, which was actually done in sort of 3 tranches, and overall it was close to $20 billion, a very massive operation. Now, we feel pretty comfortable of the way in which we manage our liability side, but there's one major concern that we have right now, and that's what we will be focused during this year. So where we stand on, I would say, more the macro growth side, and what we are doing and what we plan to do. As I said, we were coming of the cycle. The U.S. economy slowed down less than it was expected, but it was an asymmetrical performance within the U.S. economy. The service sector was working better than the manufacturing sector, and the manufacturing sector is the one which is much more closely correlated with the Mexican economy. Trade tensions were creating uncertainty all around, and we have our own source of uncertainty related to the new free trade agreement. So where we are and what we are doing. We are very clear that in a context and environment of uncertainty, investments are not happen just because conditions are right. Investments are going to happen if they are linked to very specific projects. So we are doing three kind of things. The first one is we advance all the procurement and bidding process for this fiscal year. So we exploit actually the possibility to start bidding process for 2020 early in 2019, and that's perfectly legal as long as the construction actually does not start before January 1st. So just so to give you an idea, around 74% of all contracts for highways and roads in our budget were closed in December. So in January 2nd, the Communications and Transport Ministry actually start with works in the ground as opposed to start preparing preparing the bidding process. So when you look to the profile of investment projects, usually they have certain kind of very clear seasonality when the projects are started to be prepared in January and February, the bidding process late February, March, and then eventually you start ramping up. That we were able to break. The second one is we realized that there were several projects in which they were jointly done with the local governments, and the local governments currently represent between 30 to 30-something% of all investment. But that would not happen if they were not triggered by us. So that requires that we have certain special funds, the metropolitan funds, the regional funds, and some funds done through Fonadin, which is an investment off-balance project. What we need to do was to move it forward and take decisions relatively early. And so we have taken over the last 2 or 3 months decisions related to those funds for investments in the subway systems in Guadalajara, in Monterrey, in water systems in Culiacan and Mazatlan, hospital infrastructure in Tlaxcala, high road infrastructure in Hidalgo, and actually all that started. So that takes 2 of the first 3 things that we wanted to do in investment. The first one, as I say, was move forward our own investment. The second one, move forward the decisions in which we were co-investment with a local government. And the third one that we thought it was very important is really the keystone for any performance in economics in Mexico is anchored to private investment. Private investment in Mexico is almost 7 times what public investment is done. So we need to create the conditions for private investment to thrive. But we were very conscious that in this juncture it's complicated. So the first thing that we did were those projects done by the private sector which have or require certain level of participation of the government. And I'm not thinking in PPPs. I'm thinking things, for example, like high road concessions, permits, etc. And so we decide, for example, to increase, as we call it technically in Mexico, to unfold certain concessions, which means increase the length of the concession, and in response to that, condition the tenor of the concession to additional investments in highways and roads. And that ended up being very handy for us, because that means that we actually have in-the-ground investment done not with public public resources. And finally, we went into a project which we thought it was very interesting, which was taking a stock of all the infrastructure projects that are somewhere there, from the public sector, from the private sector, etc. Some were not even related to Mexico. Some were, for example, gas-related projects that were taking the gas from Texas, take it somewhere in the coast of Mexico in order to export to Asia, but that require different levels of participation. And we classify them in 3 categories. The first one is those which were basically ready to happen, and it just require a final decision, a final push, etc. We pick up, I think it was 18 of them, which equivalent, the initial equivalent, I think, is something between $5 to $6 billion, and we move it immediately, but within days. So what we are creating is a system in which we are analyzing all the projects and making sure that we are facilitating them for investing to happen. Now, this is a practice that it could have been very, very useful in a juncture like this one, but it becomes doubly important because there was something really, really important for us, and that it was something that was not certain for sure, and that it was key in terms of how 2020 will play out. And for the better part of the year, a big chunk of our attention was focused in what would happen with a trade agreement in Mexico. So the way we were reading this is we do have a free trade agreement. So it was not a matter of having a free trade agreement or not. But the question was, in a world that was facing many uncertainties, and that's Brexit, that's the US-China conflicts, that's the Middle East, we wanted to make sure that there were much more permanent rules for the North America region. And to be absolutely frank, my concern was to try to get the deal sooner than later, because to be perfectly honest, I always thought that we will be signing the new trade agreement. But I always thought also that it would be much better for Mexico to sign it when there, I mean, we hope this global uncertainty will be settled soon, but while it settles, it will be much better to have this certainty in North America, because some sort of there will be some sort of rearrangement of the global value chains, and the global value chains are going to start looking for these spaces of certainty. And the first one that they are going to find is a North America Free Trade Agreement. Now, the fact that it's now that we are basically there doesn't mean that investment is going to happen just instantaneously. It means that we need to create the conditions for that investment to happen, and that means issues related to permits, to license, etc. So what we expect now for year 2020, both on the fiscal and on the financial side. So we're going to run again a primary surplus. So we will continue making sure that we are running a responsible fiscal policy. We are increasing the pace. Nevertheless, we are increasing the pace in which we are unfolding expenditures, particularly on the infrastructure side. We are coordinating much better with the subnational governments. Also, we came early to the markets. We have two bond issues, one in dollars and one in euros, early this month. We learned the hard way in Mexico that we better be cautious where issues are related to market. We were able to get our lowest interest rates both in dollars and in euros, and that was important not only for us, but it's also because we set the benchmarks at which the private sector also raised money in the capital market. Now, what else we are concerned? The one thing that we have put a lot of effort, but it has yet not paid off, is to reanimate the financial sector. As you know, the financial sector is key everywhere, but is relatively thin in Mexico. No matter which metric you take, IPOs, assets under management by pension funds, banking accounts opened by citizens, we tend to lag with respect to our natural comparable peers in Latin America. And we did a lot of things last year. So we changed in ways which are important the regulation of the financial sector. We reduced the tax rate in 2/3 for IPOs. We changed the tax treatment for bond holders. We homogenized it actually. Foreign bond holders were having a different tax treatment than local bond holders. We changed the investment regime of the pension funds, and we were barely able to make an impact. So what we are doing now is a deep search in trying to understand which are beyond regulation the real obstacles to the financial sector. And let me finish with this. So what we are let me actually make two separate comments related to these issues. What we see in terms of things that we need to change in the short term. The first one is this one related to the financial sector, to understand what is happening what are the characteristics of the market structure that are making that the financial sector is moving much more slower in Mexico than in countries like Brazil, Colombia, or Peru. But the second one, which is also very important, we realized that and that was probably the benefit of having a relatively new team to the government, that rather than just continue working as business as usual, we start asking questions and asking ourselves why things were operating in a particular way. And you may be familiar that Mexico is probably one of the very last, if not the last country, in which you have a very specific way in which the debt is reported. We report our debt in net terms, in terms of gross terms. That means that when we report it from our gross debt, we reduce our assets under management. But what happened when we reach December 31st? The debt we report, which is going to be the baseline through which the debt is going to be measured, the increase on the debt is measured for next year, is discounted by the assets under management, by certain assets, but most of the assets under management, liquid assets, including assets in the treasury, assets in the social security system, not related to pensions, but actually, and because that becomes a new baseline, that means that each of the agencies cannot expend it the next year, because it will mean that you increase the net debt even if you are not issuing anything in the market. So that you could live up with that for a year, but the change in the definition was introduced in the late 80s, and when you have spent almost 30 years accumulating assets, what you have is billions of dollars under certain departments. I'll give you one example. The ISSSTE, which is a social security system for government workers, which provides both pensions and health services, have more than $5 billion on the reserves, not all of them related to the pension part, that they just cannot spend it because legally it will increase the net debt. So the two main things that we're going to be working and that are related this year is we need to adopt the definition of debt that is used everywhere, and actually the IMF has been insisting on this for years. It is unnecessary, that the definition that we have right now, because it was adopted right after the renegotiations of the 1980s debt, when Mexico was actually pledging collateral related to those operations. None of our operations has collateral anymore, and not has habit for years now, probably for almost 20 years, since we end up paying all the Brady bonds and all the operations related to that. And we will link that to the introduction of a countercyclical fiscal policy. So those are the two main issues in which we will be working this year, and we expect to present the amendments related to that on September 8th. Thank you very much.
You've been very clear that a fiscal reform eventually is something that is going to happen in the second part of the administration. So regardless of the fiscal adjustments and things you're doing on this year's budget, if you could elaborate a little bit on what will be your ideal fiscal reform, like what kind of adjustment you will be looking at, how progressive it could be, where additional revenues could come from. I would really appreciate to have visibility of how that potential fiscal reform could look like.
Yeah. Should I go ahead? Yeah. Actually, let me clarify a couple of things. First about what would be the principles for that, right? The main principles is that, and this is very important nowadays in modern times, countries usually try to set what are the principles and what they want to achieve before actually start discussing it, right? So, for example, during the Bush administration, there was a tax committee, and the principles were very clear. The reform, which never actually happened, was supposed to be revenue neutral, right? It was not supposed to increase resources. It was just supposed to have a better. So what any kind of reform in Mexico should not be revenue neutral. It has to increase resources and has to be equity improving, right? Now, the fact that we are starting to do that doesn't mean that we are not doing things right now, and actually things that are pretty close to what you will call a reform elsewhere. So when you talk about the way in which taxes are collected everywhere, traditional people in the public sector divide the way they approach the organization of the tax system in two categories: tax policy and tax administration. And by tax policy, you mean the introduction or the kind of taxes that you collect, and the tax rates associated with that. And none of that we have changed. And by tax administration, you mean the tools and the way in which the tax administrations like the IRS here are organized. And traditional people just think that when you do an improvement on the second part of that, that means that you change the way in which the audits are done, the way in which audits are planned, the way in which the IRS is organized. But that also means, but that's not the whole story, because also the way in which in the tax administration works, it depends of the legal way in which they are able to operate. And we have changed many of the normative framework of the tax administration. So let me tell you one or two that we already changed, and that they are already starting to pay off, and they are actually starting to illustrate pretty much helping us to understand the landscape in which a tax administration is operating. A practice that was probably always present, but at a really small scale in Mexico, was the issue of issuing false invoices, which is obviously illegal. I mean, when it's done, it's probably done in every tax system, but probably at a very low scale. So it is starting to be growing in Mexico, but it also happened that there were these shell firms that were set for the only purpose of issuing false invoices. Actually, when an audit came, there was the company only exists in a mailbox legally. There was no activities. So we decided to change the way in which legally those will be treated, and we introduced a reform, and that became a crime. So it was something that is penalized now with prison, right? And it was changed. All the legal claims, because it was a series of reforms, were changed in probably October, and it started to be effective January 1st, right? So we were ready and starting to prepare the systems and the way that we will be working in January 1st, a few weeks ago. And then early in December, some taxpayers start approaching us, and without us detecting that there were fraud or auditing them, they are starting approaching us and said, listen, we have been under-reporting the amounts of tax that we have to pay. We have been reporting them using false invoices. It is a serious but an administrative issue, and that we're talking December, but it's going to be a crime in January. So we want to come forward and start paying right now. So before even the reform start to be implemented, we start receiving taxes that we were not expecting. That actually we're pretty glad about that, right? But we thought that it will be a starting payoff after January 1st. We didn't even know. So just to give you an idea, a set of five companies in the heavy industrial sector approach us in November, and in December they pay the equivalent of 2,000 million pesos in taxes, right? See, if you assume a an effective tax rate of something around 25% or something like that, that means that those firms are probably selling close to $500 million. So when we're talking about who was falsifying the way, using false documents to report their taxes, we are not talking of some middle company. These are companies which were really serious, very important, right? So this is the kind of thing that we are betting right now. This was only one of the several measures that we already introduced in law. So again, it depends how you see it. Some people don't want to talk about a tax reform unless they see a change in the tax structure and in the tax rate. But let me give you 3 or 4 of the things that we introduced already in the legislation, and they are already law. This is one. The second one, we adopt a series of measures that were recommended by the OECD or that were practiced in OECD countries. For example, there's something which is called the non-abuse clause, which means that a holding company could reorganize themselves in whatever way they wanted if there's an economic reason for that. If they want to do a spin-off, a part of a company, etc. If they reorganize themselves just for the purposes of avoiding taxes, it's considered illegal. And that's a measure that was introduced in Britain, in continental Europe. We adopted for the first time. We introduced legislation that allow us, and that we did it also in a coordinated way, that would allow us to tax the digital economy. Now, the digital economy, as always, is growing pretty fast. In Mexico, it was 5.2% of all of GDP when we started. It's supposed to be closing to 6% of GDP. So we reached an agreement already with a transport sector related to the digital economy, Uber, Lyft, etc. And we are starting to move in other sectors. So yes, ideally we will have a reform that will be equity improvement and revenue improvement. But we already have much more tougher system right now, and we are expecting to start paying off right away.
So we have time for 1 or 2 more questions here at the back.
Thank you. Does the government have additional capacity to provide more funds to Pemex this year?
Well, capacity we have. It's a matter if we're willing to provide more funds to Pemex. And when we see, and actually let me tell you where is that capacity coming from. And we do have money in the budget, which we are going to capitalize it. But I would say we support, there were three main issues related to Pemex that were really a matter of concern for market participants and for us when the administration was inaugurated in December 1st. The first one was that production was declining straight for 14 years. So between 2003 and 2004, production was 3.4%. It reached a floor, actually about a year ago, late January, early February. From then on, the production was stabilized, and now it's higher than it was a year ago. So we think that Pemex is in the right way related to that. The second one were issues related to the liquidity of Pemex, particularly with issues related to the bonds that were coming up in the next 3 years. I would say most of those topics were addressed by the liability management we did last September, and then we split. And to be absolutely frank, we exploit one of the things that we wanted to change. The fact that, as you remember, I said that we report our debt in net terms. So what we have was some assets that we couldn't use it, because if we use it everywhere, it will increase the net debt. But we could use it to pay debt, and then the net debt is the same. So we did that with Pemex. But the way that we technically did it, we pulled these assets that we couldn't use, that were under the federal government, and we injected the capital for $5 billion to Pemex in September. Now, so we think that 2 of the 3 big issues in Pemex are already in much better shape. What we would like is the company now to stand by themselves. They should be able. They should be able. Of course, it's extremely important. It's probably the most important asset, not only for the government but for the country. We will always be there, as probably some of the rating agencies assuming. But what we like is a company that is properly run and profitable by themselves, as opposed to a company that is continuously relying on transfers from the federal government.
One more question.
Hello. I have a question about the subnational reporting. The audit, Supreme Audit Institution in Mexico, the Auditoría Superior de la Federación, has noted that there are some information that's missing from the Cuenta Pública and the quarterly fiscal reports. And in particular, that information relates to employment-related pensions, the stock of T-bonds issued to Banxico, and expenditures, and the debt position of the subnational governments. And I was wondering if you could comment on what you're doing to include that missing information in the Cuenta Pública and the quarterly fiscal report. Thanks.
Of the federal government?
Yeah, this is subnational information that's missing.
No, but that's why I mean in which Cuenta Pública you want to see it. And this is something which is very close to my heart. So when you look to Latin America, and there are probably close to 30 countries in Latin America, only 3 of those countries are federal governments: Mexico, Brazil, and Argentina, right? The rest of the countries, like Brazil, like Peru or Colombia, are unitary countries. That means, among other things, that they consolidate all the fiscal positions of those national governments when they report the central government. When you are a federal government, like in Mexico, you do not consolidate it, right? And if you want me to give you an extreme example, which is not related to Mexico or to Latin America, you may remember when Orange County went bankrupt or were unable to pay some municipal bonds a few years ago. Nothing happened. Nothing was reported at the federal government. The same happened with Mexico. The states are actually constitutionally sovereign. They actually have their own constitutions. So we do not aggregate their fiscal position, which also means that we do not bail out them legally. We are not responsible. Now, that doesn't mean that in the past there has not been some bailouts. Argentina is also a federal country, and Brazil is a federal country, and there were bailouts over the last 20 years. So what the country has been working for a long time, it was how to avoid to put themselves in a position in which, because of a political, not a legal thing, they will be forced or in a position in which there will be requirements to bail out. And there has been, I would say, 3 major efforts. One was in the late 90s, after a bailout, in which it was the way in which it was addressed was to recognize publicly that this was different balance sheets and that it will not be a bailout, and that therefore the sovereign governments should rate themselves. So it was required that the states and municipalities will hire a credit rating agencies, so that it will be public to the banking and the financial sector what would be the risk that they will be facing, as opposed to think that there was an implicit support from the federal government. That was the first main reform. There was another reform. I think it probably started 10 years ago. I'm not sure exactly, because the states are sovereign. That means that they have their own constitutions, but they have their own laws. And that includes the laws, the fiscal and debt laws, and includes the definition, the way in which they define debt, right? So there were states that say, if I pay any kind of credit within the same fiscal year, that would not be legally debt, right? So there was a debt contract, it was credit, it was money flowing, but it was just not legally debt. And we have 32 different frameworks, one for each state. And there was some arbitration, there were probably some abuses. So there was an agreement within the country, and because the states are sovereign, it has to be taken at a constitutional level. So to have some sort of harmonization of the fiscal framework. That was the second reform. And I would say there has not been a direct bailout from the federal government there. The third one, which is more a soft reform, but it's probably very effective, is the one we introduced it, which beside the legal framework, there were some discretionary funds which were channeled through the states. And the president offered to the governors to respect the interfiscal agreement as it is set by the law, but that means that none of their fiscal capabilities will be taken out, but also means that there will be no discretionary transfers. And that is very important as long as it's become a credible policy, and it become credible. And now the way in which we are seeing is that subnational governments making their adjustments by themselves and trying to run much responsible fiscal policies, are supposed to be assuming that there will be support from the federal government down the road.